Welcome back to Explain the Charts, your go-to channel for in-depth cryptocurrency analysis. Today, September 25th, 2025, we're dissecting the latest news and then diving into the charts for BTCUSD to understand current market movements and future possibilities. The cryptocurrency market is currently under significant pressure, experiencing what many are calling a crash, with Bitcoin recently dropping below the critical $112,000 mark. Recent reports indicate a staggering $1.7 billion in liquidations over the last 24 hours, predominantly affecting long positions, as traders prepare for over $517 million worth of token unlocks in the coming week. This anticipation, coupled with broader macroeconomic uncertainty, is fueling fears of increased selling pressure. Despite this downturn, a silver lining appears with $163 million in inflows into U.S. Bitcoin spot ETFs, signaling robust institutional demand even amidst the volatility. On the regulatory front, the SEC's updated ETF guidelines, issued on September 21st, are introducing stricter compliance checks, particularly impacting altcoins. The U.S. Treasury is also exploring reserve rules for stablecoins, adding another layer of caution for investors. Positive news includes the US-UK Crypto Task Force aiming to harmonize regulations by March 2026 and the SEC fast-tracking Solana and XRP ETF approvals, with Rex Osprey's XRP ETF already seeing a $37.7 million debut. South Korea is also planning to finalize guidelines for spot Bitcoin ETFs by late 2025, mirroring the U.S. model. These developments point towards increasing institutional acceptance and integration of crypto into traditional finance. Analysts like Michael Saylor and Bitwise CIO Matt Hogan are predicting long-term bullish supercycles for Bitcoin, potentially reaching over $1 million by 2035, driven by Wall Street's growing embrace. However, the immediate sentiment is neutral, with the Fear and Greed Index at 47 and an average crypto RSI of 36.18 suggesting an oversold market, often a precursor to rebounds. Now, let's turn our attention to the charts to see how these events are playing out. Looking at the daily chart for BTCUSD, we can observe the broader trend over the past year. After trading around $61,000 in May 2024, Bitcoin experienced significant bullish momentum, pushing towards all-time highs above $110,000 by late 2024 and into 2025. Notice the sharp but temporary dips, such as the one in early August 2024, plummeting from approximately $58,000 to nearly $49,000 before a strong V-shaped recovery. Similar volatility was seen in February and March 2025, with major sell-offs followed by quick bounces, reflecting periods of high liquidation events that align with our news segment. These dramatic pullbacks highlight Bitcoin's inherent volatility, even within a long-term uptrend. The overall picture remains bullish over this longer time frame, characterized by higher highs and higher lows. From a support and resistance perspective on this daily chart, the $100,000 level has acted as crucial psychological and technical support, especially during the dips in early 2025. Reclaiming $117,000 is cited as a significant bullish signal by analysts, potentially opening the path towards $123,000. Conversely, the $112,000 zone, as mentioned in the news, is a critical current support level, with a failure to hold it possibly leading to further declines towards $108,000 or even $100,000. We can see multiple retests of levels around $110,000 to $112,000 in recent months, underscoring their importance. Now, let's zoom in on the most recent price action using the 15-minute chart to understand the immediate impact of current events. Here, we can see a clearer picture of the sharp crypto sell-off mentioned in the news. Specifically, around September 22nd at 5:48 Universal Time Coordinated, Bitcoin experienced a notable drop from approximately $114,600 down to $112,270. This rapid decline aligns perfectly with reports of significant market pressure and liquidations occurring around this time frame, Even though our news is from September 25th, this event laid the groundwork. Following the sharp move, Bitcoin entered a period of consolidation, mostly ranging between $112,500 and $113,800 through September 23rd and 24th. The latest candlestick data for September 24th shows Bitcoin closing around $113,300. However, current news reports for September 25th indicate Bitcoin has since dipped further, trading around $112,660, reinforcing the $112,000 level as immediate critical support that is actively being tested. This short-term pressure on the chart is directly influenced by the macro uncertainty and token unlock fears discussed earlier. For short-term traders, the $112,000 mark is the immediate line in the sand. A sustained break below this could see a rapid descent towards $108,000 or even retesting the strong $100,000 psychological support. Conversely, if Bitcoin can reclaim and stabilize above $113,000, it could signal a short-term reversal, with the next resistance lying around $115,000 and then $117,000. Now, let's weigh the bullish and bearish arguments for BTCUSD. On the bullish side, significant institutional demand, evidenced by continued ETF inflows and major corporate buys from Metaplanet and MicroStrategy, provides a strong long-term foundation. The increasing Wall Street crypto adoption and utility enhancements like Stacks SBTC and Square's Bitcoin payments suggest a growing ecosystem and potential supercycle for Bitcoin. Furthermore, an oversold RSI, as noted in the news, often signals a potential rebound opportunity, especially for long-term accumulation. The historical resilience of Bitcoin through various boom and bust cycles also instills confidence. However, reasons to be bearish in the short term include the immediate market crash, massive liquidations, and the looming token unlocks, which could increase selling pressure. Macroeconomic uncertainty, including mixed messages from Fed officials and the potential for a government shutdown, adds to investor caution. If Bitcoin fails to hold critical support levels like $112,000 or $108,000, it could trigger further algorithmic selling and extend the downtrend. The high open interest in derivatives also indicates a market ripe for volatility expansion, which could swing either way. When deciding when and at what price to trade, extreme caution is advised given the current volatility. Monitor Bitcoin's interaction with the $112,000 level very closely on the shorter timeframes. For long-term investors, market pullbacks historically present accumulation opportunities, but be prepared for continued near-term price swings. To recap, the immediate price levels to watch are $112,000 as crucial support, with potential drops to $108,000 and even $100,000 if it fails to hold. On the upside, reclaiming $113,000 and then breaking past $117,000 would be strong bullish signals, with $123,000 as a potential target. The likelihood of a short-term rebound is moderate, possibly reinforced by the oversold RSI, but highly dependent on how the market digests upcoming token unlocks and any new macroeconomic data, particularly from Federal Reserve statements. Keep an eye on the outcome of pending SEC rulings for altcoin ETFs and the overall sentiment reflected by the Fear and Greed Index. These factors could quickly shift market dynamics. Longer term, the bullish outlook driven by increasing institutional adoption and Bitcoin's evolving utility remains quite strong, making deep dips potential buying opportunities for those with a multi-year horizon. Always conduct your own due diligence and consider market developments in real time. Thank you for watching Explain the Charts, and we'll see you in the next one.